Today, as you may have noticed if you were looking at finance Twitter or watching this show earlier, Lyft was initiated across Wall Street investment banks. A number of firms coming out with very positive views on on the company, on Lyft versus Uber versus the industry at large. What they think about self-driving cars, all that good stuff. So this chart, which we pulled out from UBS's big note on Lyft, initiating their coverage of Lyft with a buy rating, is the growth in ticket spend. So the average ticket per month from Lyft users versus Uber. So the purple line, which is accelerating up and to the right, shows that Lyft users on average are spending more per month, or the amount they're spending on Lyft is increasing at a faster rate than Uber each month. And I think that when you look at the stories behind these two companies, and it really came into sharp focus with a number of these calls today, which is that Lyft is the pure play. Lyft is the people get in cars, they go one place, and then they use the service to get in more cars, go other places. Uber has the whole platform story. Uber Eats, the self-driving trucks, international, all that good stuff. But this data, which shows US users spending more on Lyft per month than Uber users, or spending more, the growth at which they're spending more money is accelerating faster than Uber, shows that I think on a pure play basis, that story kind of holds up, right? People in the US are spending more on Lyft than they are on Uber, or increasing their spend on Lyft versus Uber.
I agree. Anecdotally, this chart is exactly what I would
feel like you're taking Lyft
I had
more.
never taken a Lyft until maybe last year. I was just a pure Uber play. And then all of the Uber headlines drove a lot of people, I think, that use services to kind of be arbitraging the two, spreading out your spend a little bit, checking all the services, because it's basically like a commodity now, especially in a place like New York City where you don't have a car. That's all we do. And so spreading it out kind of makes sense.
So I will say anecdotally, for me, I find that the Lyft prices are generally lower than Uber rides, and I will opt for Lyft if it happens to be in a case where it's a long journey and it'll be maybe 50 or 60 bucks perhaps from the airport, for example, and I'll shop around the Uber and the Lyft app. And that might explain this because of the fact that it might not be the number of rides itself that's actually increased over Lyft compared to Uber, but actually the amount of dollars that are spent there because of these larger rides that might be a little bit cheaper than Uber.
Well, and I think that would also speak to the more pure play US market side of Lyft. If Lyft has a larger presence in a big US city like New York, Miami, San Francisco, Chicago, whatever it might be, those users are going to be more inclined to be taking very expensive rides, because we've all taken an Uber or a Lyft, but more often an Uber, in a less populated area of the country, and you would be amazed at how far you go for how little money. But in New York, to go from Penn Station to where you live, Brian, that's a $50 or $60 Uber ride. But to go that kind of distance in Omaha, when we're there next week, Jen, that would cost like 11 bucks, right? And so I think that speaks to the more urbanized, more US focus that Lyft has right now versus Uber.
But as Lyft has been trying, and Uber are trying to get more riders, the amount of the incentivization that they're doing for people by giving you 20% off, by trying to compete with coupons, they've all got us hooked on these cheap rides. And it was made, I think the case was made in maybe the Credit Suisse one, that how can they pull that back? They're going to have to pull that back. We are all on like a little high here of getting our 20% coupons and playing back and forth. But eventually, like Netflix, they're going to raise prices and we're going to pay for it.
Yeah, but that's good for the company.
Yeah,
if you're an investor, it's good for the company.
I think, but I don't know what it does to this chart.
It makes this chart go up even more, right? I mean, both services would accelerate.
This isn't a zero-sum gain. It's not like Lyft and Uber are competing for market share. These are growth percentages, and it doesn't mean that both companies can't have positive growth percentages. I think the zero-sum gain is also translatable to the overall automotive industry, for example. Everyone's so bullish on Lyft and Uber. We haven't seen a sell-off in Ford or GM. So I think that this is a story about just how much the ride-sharing industry on the whole has to grow, and how Lyft and Uber can get both of those numbers up in the coming months.
Nice chart, Myles.
Thanks, guys.